Corcel PLC. Updates on operations and shareholding developments. Corcel PLC, CRCL, is a UK-based company focused on upstream oil and gas and battery metals, operating mainly in Angola, Brazil, and Western Australia. Recent developments include a successful well workover in Brazil and a significant shareholding change, with Nurjan Subhamberdeen acquiring 8.43% of voting rights. Corcel PLC, listed on the London Stock Exchange under the ticker CRCL, is an upstream oil and gas development company with additional interests in battery metals. It focuses on projects in the onshore Kwanza Basin in Angola and onshore Brazil, alongside battery metal explorations in Western Australia. This dual focus offers exposure to both traditional energy and emerging green technologies, which could be appealing for diversified investment portfolios. A notable recent development is the successful completion and initial results of the EI-1 well workover in the Irai field, Brazil, where Corcel holds an option to acquire an initial 20% interest. Additionally, on February 24, 2025, Nurjan Subhamberdeen acquired 468,750,000 voting rights, representing 8.43% of total voting rights, which could signal potential shifts in company control or strategy. Exploration and development, which carries higher risks but also has the potential for significant returns. The company, founded in 2004 and listed in 2005, operates at the intersection of upstream oil and gas development and battery metals, with a geographical focus on Angola, Brazil, and Western Australia. Corcel PLC, formerly known as Regency Mines PLC until August 2020, is headquartered in London, United Kingdom. It is an upstream oil and gas development company with residual interests in battery metals, positioning itself to capitalize on both traditional energy markets and the growing demand for electrification commodities. The company's portfolio includes oil and gas projects, interests in 3 licenses in the onshore Kwanza Basin, Angola, KON 11, KON 12, KON 16, and options for gas production onshore Brazil, with a recent focus on the Irai field. Battery metals, projects such as the Canagras Lithium Project and Mount Weld Rare Earth Elements Project in Western Australia, offering exposure to nickel, rare earth elements, and lithium, key for energy storage and electric vehicles. The company's strategy emphasizes production and development, aiming for operator status and majority positions over time, while also exploring blue sky potential in its upstream battery metals portfolio. This dual focus is particularly relevant given global energy transition trends, where hydrocarbons remain significant, and battery metals fuel renewable energy adoption. Recent developments and news. Several recent developments are critical for investors. EI-1 well workover in Brazil. On November 18, 2024, Corcel announced the successful completion and initial results of the EI-1 well workover in the Irai field, operated by Petroborn Óleo e Gás SA. The company holds an option to acquire an initial 20% interest, potentially expanding its production capabilities in Brazil. Significant shareholding change. As of February 24, 2025, Nurjan Subhamberdeen acquired 468,750,000 voting rights, representing 8.43% of total voting rights, notified on February 25, 2025. This change, detailed in a regulatory news service (RNS) announcement, could indicate a shift in ownership influence, which investors should monitor for potential strategic implications. These developments highlight Corcel's active engagement in expanding its operational footprint and managing shareholder dynamics, which could impact future growth trajectories. Financial performance and market data. The annual report for the year, ended June 30, 2024, was published on December 17, 2024. Specific financial highlights, such as revenue, profit, loss, and cash flow, are not fully accessible in this analysis, but the report is available for download at Corcel PLC Annual Reports. Investors are encouraged to review this for detailed financial health. Market capitalization and share price. As of February 27, 2025, Corcel's market capitalization is approximately $7.3 million, based on approximately 3.84 billion shares in issue. The share price ranges from 0.15p to 0.175p, reflecting volatility over the past year, with a high of 1.125p and a low of 0.095p. For potential investors, several factors are noteworthy. Diversified exposure. Corcel's dual focus on oil and gas and battery metals offers diversification, aligning with both traditional energy needs and the green energy transition. This could be attractive for investors seeking exposure to multiple sectors, but it also introduces complexity in assessing performance across diverse assets. Exploration and development risks. The company's emphasis on exploration and development, particularly in Angola and Brazil, carries inherent risks, including geological uncertainties, regulatory challenges, and capital intensity. However, successful projects could yield significant returns, especially given the prolific nature of these regions. Shareholder dynamics. The recent acquisition of 8.43% voting rights by Nurjan Subhanbardine introduces potential changes in control or strategy, which could be positive or negative depending on future decisions. Investors should monitor RNS announcements for further updates. Market volatility. The share price's volatility, with a significant drop over the past year, suggests high risk, particularly for short-term traders. Long-term investors might consider the potential for recovery, especially with successful project developments. Conclusion. Corcel PLC presents a high-risk, high-reward opportunity for investors, given its diversified portfolio and recent operational advancements. However, the volatility in share price and lack of dividend payments suggest caution, particularly for risk-averse investors. The significant shareholding change in February 2025 adds an unexpected layer of complexity, potentially influencing future strategy, which investors should watch closely. For detailed financial analysis, reviewing the 2024 annual report and staying updated via RNS announcements is recommended.